Look around you right now. Your phone, your laptop, the light switch on your wall. Everything you see is a miracle of modern engineering. But here's something nobody tells you. None of it would exist without one specific element. Not gold, not oil, not even copper. It's element 47 on the periodic table, silver. For thousands of years, we treated it as money. We coined it, hoarded it, fought wars over it. Then something changed. Silver stopped being just a store of value. It became the DNA of our entire technological age. Without silver, satellites struggle. Without silver, solar panels lose efficiency. Without silver, the digital world fails. We built our civilization on this single metal, assuming it would always be cheap and always available. But what if that assumption is completely wrong? What if silver is actually the most undervalued asset in human history? Not because of inflation, because of physics. Because it's the one element in the universe that does what it does. And we're consuming it faster than we can replace it. This isn't about the price next week. This is about the reality of the next decade. We're going to explore the geology that limits supply, the industry that demands consumption, and the monetary history that proves silver is the ultimate form of truth. This is the story of the indispensable metal, and you need to understand what's coming. To understand silver's value, go back to high school chemistry. Look at the periodic table. There are 118 known elements, but only one is the best conductor of electricity: silver. It conducts about 6% better than copper, better than gold, better than aluminum. On a scale of 0 to 100, copper sits at 100. Silver is 106. It's the gold standard of electron flow. Why does this matter? Because we're electrifying the world. Every time you push a button, electrons move from point A to point B. You want them moving fast, without resistance, without creating heat. Resistance creates heat. Heat destroys electronics. Silver has the lowest resistance of any metal. It's the most efficient carrier of energy on Earth. In the past, when electronics were big and clunky, we could use copper. Today, electronics are microscopic. We're packing billions of transistors onto a chip the size of a fingernail. At that scale, efficiency is everything. If you use copper, the chip overheats. If you use gold, it's too expensive and not conductive enough. You must use silver for peak performance. This is the law of physics. You can't negotiate with it. You can't print a substitute. But silver isn't just about electricity. It's about light. Silver is the most reflective element known to man. Polish a bar of silver, and it reflects 95% of the visible light spectrum. That's why it was used in mirrors for centuries. But today, we don't just use it for vanity. We use it for energy. Solar panels work by capturing light and turning it into electricity. To do that efficiently, you need to capture every single photon. You can't let the light escape. Solar manufacturers use silver paste to create the conductive grid on the face of the panel. The silver collects the electrons excited by the light and transports them out of the panel into the grid. It creates a superhighway for energy. Without silver, a solar panel loses massive efficiency. It becomes a dark slab of glass that generates less power. This makes silver the keystone species of the green energy revolution. Governments want to decarbonize the world. They want net zero. To get there, they need to cover the planet in solar farms. And to build those farms, they need silver. Billions of ounces of it. This demand isn't based on consumer taste. It's not a fashion trend. It's based on the physical property of reflectivity and conductivity. As long as the sun shines and we need electricity, we need silver. But here's where it gets truly interesting. This brings us to a critical economic concept. Inelastic demand. Most commodities are elastic. If the price of beef goes up, people buy chicken. Demand drops. But silver is different. Because silver is used in such small critical amounts, the price doesn't affect the demand. Think about a cruise missile. It costs $2 million to build. Inside that missile, there's maybe $500 worth of silver. The silver is used in the guidance computer and the firing mechanism. If the price of silver triples, if it goes from $30 to $90, the cost of the silver in the missile goes from $500 to $2,500. Does the military stop building the missile because the price went up $1,000? No. The missile still costs roughly $2 million. The increase is a rounding error. But without the silver, the missile doesn't work. This is the salt in the soup theory. Silver is the salt. The missile is the soup. You only need a pinch of salt. It's cheap relative to the whole meal, but you can't make the soup without it. So you'll pay any price for the salt because the cost of not having it is ruining the entire meal. This applies to iPhones, it applies to Teslas, it applies to MRI machines. The industrial users of silver are not price sensitive. They're performance sensitive. They need the metal to make the product function. This means the price of silver can go to $500 or $1,000 and Apple will still buy it. There's no cap on the price where demand naturally destroys itself. This is what makes the upside potential so explosive. But wait, the skeptics say. Surely technology will find a substitute. We always find a substitute. This is true for many things. We replaced whale oil with kerosene. We replaced copper wires with fiber optics. But we've been looking for a cost-effective substitute for silver for 50 years. And we haven't found one that doesn't sacrifice performance. Why? Because you can't engineer your way around the periodic table. The elements are the building blocks of the universe. You can't invent an element that conducts electricity better than silver because silver is the limit of physics for stable metals at room temperature. Scientists have tried. They tried using copper. Copper creates resistance. It oxidizes. It degrades over time. If you use copper in a solar panel, the panel lifespan reduces significantly. If you use copper in a 5G tower, the signal degrades. They tried using aluminum. Aluminum is cheap, but it's a poor conductor compared to silver. It creates heat. It melts plastic. In a high-performance battery or a chip, aluminum is a fire hazard. They tried using gold. Gold is great. It doesn't rust, but gold costs $4,000 an ounce. Using gold would make every iPhone cost $10,000. So we always come back to silver. It's the Goldilocks metal, better than copper, cheaper than gold. It sits in the perfect sweet spot of performance and cost. And because of that, it has no industrial rival. When you bet on silver, you're betting that the laws of physics won't change. That's a very safe bet. Let's look at the future now. We're moving into the era of artificial intelligence and 5G. These technologies are energy hungry. An AI data center uses 10 times more power than a traditional server farm. A 5G network requires thousands of small antennas on every street corner. What connects all of this? Silver. Every server rack has silver contacts. Every 5G antenna has silver plating to carry the high-frequency signal. Every autonomous vehicle has silver in its sensors to see the road. We're building a digital nervous system for the planet, and silver is the nerve tissue. You can't have the fourth industrial revolution without the metal from the first industrial revolution. This means that the demand for silver is not cyclical, it's secular. It's growing every year regardless of whether the economy is booming or busting. In a boom, we build more tech. In a bust, governments stimulate the economy by building green infrastructure. Either way, the silver gets consumed. It's the all-weather industrial demand. So we've established that the world needs silver. The demand is based on physics. It's inelastic. It has no substitute. But what about the supply? Can't we just dig more up? If the price goes up, won't miners just flood the market with new metal? Now we're going to look at the geology. We're going to travel underground. I'm going to explain the byproduct curse. Why 70% of silver supply comes from mines that don't even care about silver. I'm going to show you why the ore grades are collapsing, meaning we have to dig twice as much dirt to get the same amount of metal. And we're going to look at why we haven't found a major new silver deposit in over a decade. The demand is exponential. The supply is finite, and the gap between them is where the opportunity lies. But first, you need to understand something most investors miss completely. Most people assume that if the price of something goes up, we'll just make more of it. If the price of corn goes up, farmers plant more corn. If the price of shoes goes up, Nike builds more factories. But mining doesn't work like that. You can't print a silver mine. You can't build one in a factory. You have to find it. You have to dig it. And you have to process it. Now we're going to look at the geology of scarcity. I'm going to explain why the silver supply is broken. Here's the single most important fact about the silver market that 99% of investors don't understand. Most silver mines are not silver mines. If you look at the global supply of silver, roughly 72% of it comes as a byproduct from mines that are primarily digging for something else. Lead, zinc, copper, gold. Imagine a miner in Mexico. He's running a massive lead and zinc mine. He digs up tons of rock. He crushes it. He extracts the lead and the zinc to sell to industrial buyers. But inside that rock, there's a tiny bit of silver. He extracts that too. It's a bonus. It's the cream on top. He sells the silver to pay for his diesel fuel. Now here's the problem. Let's say the price of silver doubles. It goes from $30 to $60. Does that miner dig faster? No. He's mining for zinc. His profitability depends on the price of zinc, not silver. If the price of zinc crashes, he shuts down the mine. And when he shuts down the zinc mine, that portion of silver supply stops. Even if silver is at an all-time high, this makes silver supply inelastic. It doesn't respond to price signals. In a normal market, high prices stimulate supply. In the silver market, high prices often do nothing because the people producing the silver don't care about silver. They care about copper or lead. This creates a dangerous vulnerability. If the global economy slows down and we need less copper for construction, those mines will slow down production, which means the supply of silver will drop. precisely at the moment when the green economy needs more of it. We're tethered to the old economy. We're relying on lead mines to power our solar future, and that tether is about to snap. But what about the primary silver miners? What about the companies that only mine silver? They're a dying breed. 30 years ago, there were many primary silver mines. Today, they produce less than 28% of the global supply, and that number is shrinking every year. Why? Because it's incredibly hard to find a deposit of pure silver that's rich enough to be profitable. Silver is usually found mixed with other metals. To find a pure silver vein is like finding a unicorn. The companies that call themselves primary silver miners are struggling. They're being forced to buy gold mines just to survive. They're diversifying away from silver because the geology is too difficult. We're seeing a consolidation where silver companies are becoming gold companies with a silver credit. This means there's no swing producer. In the oil market, Saudi Arabia can turn on the taps if the price gets too high. In the silver market, there's no Saudi Arabia. There's nobody who can just turn on the tap. The tap is broken, and it gets worse. This brings us to the concept of entropy. We've been mining silver for 5,000 years. The Romans mined it, the Spanish Empire mined it, the Americans mined it. Humanity acts like a swarm of locusts. We eat the best stuff first. We found all the silver that was sitting on the surface, then we found the silver that was 10 feet down, then we found the silver that was a mile down. We've picked the low-hanging fruit. Now we're left with the scraps. In the mining industry, we measure the quality of a mine by its ore grade. This is the amount of silver in 1 ton of rock. In 2005, the average grade for a primary silver mine was roughly 13 ounces per ton. You dig up a ton of dirt, you get 13 ounces of silver. That's a great business. Today, the average grade is closer to 4 or 5 ounces per ton. Think about the physics of that. To get the same amount of silver, we now have to dig up, crush, and process 3 times as much rock. We need 3 times the trucks, 3 times the fuel, 3 times the water, 3 times the chemicals. This destroys the profit margin. It means the cost of production is rising exponentially. We're fighting against the earth itself, and the earth is winning. We're having to go deeper underground. Mines in South Africa and Mexico are now kilometers deep. The heat is intense. The ventilation costs are massive. Every ounce we pull out of the ground today is harder to get than the ounce we pulled out yesterday. This is a one-way trend. Ore grades never go up. They only go down. We're running on a treadmill that's speeding up just to stay in the same place. If the old mines are running out, we should just find new ones, right? We try, but we're failing. There hasn't been a major world-class silver discovery in over a decade. Exploration companies are spending millions of dollars drilling holes in the ground. And they're finding dust. They're finding small deposits, low-grade deposits. But they're not finding the monster mines of the past. The Comstock lode is gone. The Potosi is empty. This is the discovery void. Even if we found a massive deposit today, it takes 10 to 15 years to build a mine. You have to do the feasibility study. You have to get the environmental permits. You have to build the roads. You have to build the mill. So the supply for 2030 is already determined. It's locked in. We know what mines will be producing 5 years from now because those mines are already under construction and there aren't enough of them. We're facing a supply cliff. Old mines are closing due to exhaustion. New mines are not coming online fast enough to replace them. And demand is going vertical. Mining is really just an energy arbitrage. You burn energy to extract value. If the cost of energy goes up, the cost of mining goes up. We're entering an era of expensive energy. Oil is becoming harder to find. ESG mandates are making coal and gas more expensive. This creates a floor under the price of silver. You can't mine silver at $20 an ounce if it costs $25 an ounce in energy to get it out. The miner goes bankrupt. Supply stops, price rises. So inflation in energy guarantees inflation in silver. They're linked. Silver is effectively stored energy. It represents the millions of joules of energy it took to crush that rock. As energy becomes a scarce resource, the battery that stores that value, silver, must reprice. This is why silver is an inflation hedge. It isn't just because people buy it when they're scared. It's because the cost to produce it rises with inflation. It's a physical connection, not just a psychological one. Finally, let's look at the map. Where is the silver? It's not in the United States. We mined ours already. The top producers are Mexico, Peru, China, Russia, and Poland. Look at that list. Mexico and Peru are the giants of the Americas, but their political environments are changing. We're seeing a wave of resource nationalism. Governments are saying, why are we letting foreign companies take our silver? They're raising taxes. They're banning open pit mining. They're threatening nationalization. Labor strikes in Peru frequently shut down mines for months. Cartel violence in Mexico makes it dangerous to transport metal. This adds a risk premium to the supply. We can't assume that the silver in the ground in Mexico will easily flow to the factories in America. And then there's Russia and China. Russia is sanctioned. Their silver is locked out of the Western system. China is a net importer. They keep everything they mine. They don't export silver. They consume it. So the free float of global mine supply is shrinking. The West is reliant on a fragile supply chain from Latin America that's becoming more hostile every day. This is a strategic vulnerability. If a war breaks out or if a trade war escalates, the supply of silver could be cut off overnight. We don't have a strategic stockpile. We rely on imports. We're living hand to mouth. So the geology is broken. The mines are empty. The byproduct curse prevents a response. And the geopolitics are dangerous. But surely there's a lot of silver above ground. Surely we can just recycle our way out of this. We recycled gold for thousands of years. Can't we do the same with silver? What I'm about to tell you will shock you. There's a third variable in this equation. It's the variable that separates silver from every other asset on Earth. Consumption. When you buy a gold coin, you put it in a safe. It stays there for 50 years. It's hoarded. When you buy a barrel of oil, you put it in a car. You burn it. It's gone. It's consumed. Silver is the only asset that lives in both worlds. It's money like gold, but it's also fuel like oil. Now we're going to look at the great disappearance. I'm going to explain why silver is the only precious metal that's being systematically dispersed into the environment. We're going to perform a forensic audit of the last 100 years of silver production. We mined 60 billion ounces. Where are they? They're not in the vaults. They're not in the jewelry boxes. They're in the trash. To understand why silver is undervalued, you have to compare it to its big brother, gold. Gold is the ultimate recyclable asset. Since the dawn of time, humans have mined roughly 6 billion ounces of gold. Because gold is so valuable, we never throw it away. We recycle 98% of it. If you have a gold ring from the Roman Empire, it was likely melted down and turned into a Spanish coin, which was melted down and turned into a modern American gold eagle. The gold stays above ground. It accumulates. Every ounce ever mined is still here. Now look at silver. We've mined roughly 60 billion ounces of silver in human history, 10 times more than gold. So you'd expect there to be 60 billion ounces sitting in vaults, right? Wrong. Experts estimate that the total identifiable above-ground bullion inventory of silver is less than 5 billion ounces. Let that sink in. 60 billion mined, 5 billion left. 55 billion ounces have been dispersed. They haven't evaporated. Atoms don't disappear, but they've been consumed. They've been dispersed into the environment in such small quantities that they're economically unrecoverable. We've treated silver like a disposable commodity for a century, and now we're realizing that we threw away the family fortune. How did we lose 55 billion ounces? It started with photography. For most of the 20th century, photography was the biggest user of silver halide crystals on film, X-rays. Millions of ounces were used every year, and millions of ounces were flushed down the drain in developing chemicals or thrown into the trash in old photos. Yes, there was recycling. Large labs recycled their fluids, but consumer film, the shoebox of photos in your attic, that silver is gone. It's trapped in the paper. It eventually goes to a landfill. Photography burned through billions of ounces of the strategic stockpile that humanity had built up over thousands of years. We traded our silver for memories. Now photography is dead, but it's been replaced by something much worse. Electronics. In the old days, silver was used in big chunks. Silverware, candlesticks, coins. If you threw away a candlestick, you were crazy. But today, silver is used in nanograms, vampire dust. It's in your iPhone, it's in the RFID tag on your new shirt, it's in the switch of your toaster, it's in the soldering of your TV. It's everywhere, but it's invisible. Because the amount per device is so small, nobody recycles it. And when your toaster breaks, do you take it to a precious metals refiner? No. You throw it in the dumpster. When you throw away a birthday card that plays a song, you're throwing away silver. We're scattering the metal across the surface of the earth. This is a problem of entropy. It takes massive amounts of energy to mine and refine silver into a pure bar. When we turn that bar into dust and sprinkle it into a landfill, we're maximizing entropy. To get it back, we'd have to dig up the landfill and process millions of tons of garbage to find a few grams of silver. The energy cost to do that is higher than the value of the metal. Unless silver goes to $500 an ounce, that metal is lost forever. So the industrial consumption of silver is a one-way street. From the mine to the factory to the landfill, it doesn't come back. This makes silver unique. It's the only precious metal that behaves like a consumable fuel. We're burning it. But wait, you say, what about solar panels? Those are big. We'll recycle those. This is the solar paradox. Yes, a solar panel contains a decent amount of silver, but a solar panel is designed to last 30 years. The silver we put into a panel today is locked away until 2056. It's sequestered, it's removed from the market for a generation. So even if we do eventually recycle it, it doesn't help us today. It doesn't help us next year. We're currently building the solar grid. We're in the accumulation phase of solar. We're installing billions of ounces. We're not yet decommissioning them. So the solar industry is a net consumer. It sucks silver out of the vault and bolts it to a roof. For the next 20 years, the solar industry acts as a black hole for silver supply. And remember the thrifting limit we discussed? Engineers tried to use less silver. They hit the limit. Now with TOPCon technology, they're using more silver. The black hole is getting stronger. So we've mined it all. We've thrown most of it away. But surely the governments have some left. Surely the United States has a strategic silver reserve for war. They did. In the 1950s, the US government held over 3 billion ounces of silver. It was the largest stockpile in history. But then they decided silver was useless. They demonetized it. They removed it from coins in 1964, and they started selling. For 30 years, the US government dumped silver onto the market. They suppressed the price by flooding the world with America's savings. By 2002, the Defense Logistics Agency announced that the stockpile was effectively zero. We sold it all. We have nothing left. Today, the US government is a net buyer. They have to buy silver to mint eagles. They have to buy silver for Tomahawk missiles. They've gone from being the supplier of last resort to the buyer of first resort. There's no government buffer to save the market. If a shortage hits, there's no vault to open. China acts differently. China has been importing silver for decades. They don't export it. They keep it, but they don't publish their numbers. We suspect China has a massive strategic reserve, but it's not for sale. It's for their industry. It's for their military. So the public inventory, the inventory we can see in London and New York, is all that's left for the investor. Let's look at that public inventory. The COMEX and the LBMA, these are the warehouses that back the paper markets. In 2021, the COMEX had nearly 150 million ounces of registered silver. Today, that number has collapsed to the 30 million ounce range. It's down nearly 80%. We're scraping the bottom of the barrel. 30 million ounces is nothing. The world consumes that in 10 days. Why is it draining? Because the paper price is too low. Smart money is buying the paper contract, standing for delivery, taking the metal and moving it into private vaults. They're draining the exchange. They know that the vampire dust phenomenon means the metal is disappearing. They know the mines are empty, so they're grabbing the last accessible bars while they can. This trend is linear and relentless. Every month, the inventory drops. Mathematically, we're heading towards zero. When the registered inventory hits zero, the paper market breaks. You can't trade a futures contract if there's nothing to deliver. The market mechanism breaks, and then the price will reset to a level that forces people to stop throwing away their iPhones. That price is not $70, it's multiples higher. We need to address the green narrative. Politicians say we'll build a circular economy, we'll recycle everything. It's a noble goal, but it ignores economics. Recycling costs money. It takes energy. It takes labor. It takes chemicals. Currently, it costs about $20 to recycle a solar panel to get back $3 worth of silver. Nobody does it. It's cheaper to put the panel in a landfill. For recycling to work, the price of silver has to be high enough to pay for the recycling process. Analysts estimate that silver needs to be over $150 an ounce to make widespread e-waste and solar recycling profitable. So the market has to go to $150 just to stop the waste. The price must rise to save the planet. Until we hit that threshold, we'll continue to bury millions of ounces a year. We're literally burying our wealth because the paper market says it's worthless, while physics says it's priceless. This arbitrage between price and value is the opportunity. The market is mispricing the entropy, so the physics is undeniable. The geology is broken, the consumption is total. But there's one more piece of this puzzle you need to understand. The case for silver as an industrial metal is closed. It's indispensable. It's finite. It's disappearing. If silver were just a commodity like copper or nickel, the price would already be doubling based on supply and demand alone. But silver is not just a commodity. It has a second soul, a soul that's been sleeping for 150 years. Money. Now we're going to look at the monetary return. We're going to explain why silver was the primary currency of the world for 5,000 years. We're going to look at the crime of 1873, the political decision that stripped silver of its crown. And we're going to explain why the collapse of the global debt bubble is about to force the world to crown it again. We're moving from physics to economics, from the factory to the bank. This is the story of the once and future money. To understand why silver is cheap today, you have to understand why it stopped being money. For most of human history, the world operated on a bimetallic standard. Gold was used for large transactions. Silver was used for daily life. The gold of kings and the silver of gentlemen. But in the late 19th century, a group of bankers and politicians made a decision. They wanted to consolidate power. They wanted to control the money supply. Silver was too abundant. It was too decentralized. It was too hard to control because anyone could dig it up and bring it to the mint. Gold was scarcer. It was easier to centralize in bank vaults. So in 1873, the United States passed legislation that effectively demonetized silver. They stopped minting silver dollars for free circulation. They moved the world to a gold standard. Historians call this the crime of 1873. This political act crushed the value of silver. It broke the historical link between gold and silver. It turned silver from money into just a metal. For 150 years, silver has been living in exile. It's been priced based on its utility as a spoon or a photo or a switch. It lost its monetary premium. But here's the secret. Laws can change, politics can change, but the properties of money do not change. Money must be durable, divisible, portable, and scarce. Fiat currency fails the scarcity test. As the fiat system collapses under the weight of debt, the world is looking for honest money again, and silver is waiting. Why is the fiat system dying? Math. The global debt load has reached levels that are mathematically impossible to repay. The United States alone owes over $36 trillion. The interest on that debt is consuming the tax revenue. There are only two ways to solve a debt crisis of this magnitude. Option 1, default. Tell the creditors you aren't paying. Governments hate this. Option 2, inflation. Print money to pay the debt. History tells us that governments always choose option 2. They choose inflation. They choose to debase the currency. We're in the early stages of the Great Debasement. When a currency dies, people flee to hard assets. They buy real estate. They buy art. They buy gold. But real estate is illiquid. Art is subjective. And gold is expensive. At $4,000 an ounce, gold is out of reach for the average person. So where do the billions of people go? They go to silver. Silver is the people's money. It's the only hard asset that's affordable for the working class, but acts exactly like gold. It creates a monetary bid from the bottom up. While central banks buy gold, the people buy silver, and there are a lot more people than central banks. Let's talk about the gold to silver ratio one last time. This is the most powerful indicator of value in the world. How many ounces of silver does it take to buy 1 ounce of gold? Geology says 8 to 1. Mining says 7 to 1. History says 15 to 1. The market says 60 to 1. Right now, the market says silver is 60 times less valuable than gold. This is an anomaly. It's a distortion caused by the demonetization we talked about. It ignores the geology. It ignores the scarcity. If the monetary system resets, if silver regains its status as money, historically, the ratio has a strong tendency to revert. It must go back to 15 to 1 or at least 30 to 1. Let's do the math. If gold stays at $4,500 and the ratio goes to 30 to 1, silver goes to $150. If the ratio goes to 15 to 1, silver goes to $300. And this assumes gold doesn't go higher. This ratio compression is the energy stored in the spring. Silver is undervalued relative to gold, relative to mining costs, and relative to history. It's the most coiled asset on the planet. But the real power comes from something else entirely. When the mania hits, psychology takes over. When the average person realizes their money is dying, they panic. They want to save their wealth. They go to the coin shop. They see a gold coin for $4,500. They can't afford it. They see a silver coin for $70 or $80. They can afford it. They buy the silver. This is why silver outperforms gold at the end of a bull market. It's the FOMO trade for the masses. It's accessible. It feels heavy in your hand. It feels like real wealth because the silver market is so tiny compared to the gold market. When the masses rush in, the price goes vertical. The door to the silver market is very small. When everyone tries to run through it at once, the frame breaks. This happened in 1980. It happened in 2011. It will happen again in 2026. The poor man's gold becomes the rich man's asset. So let's summarize the case. We have physics. Silver is the best conductor on Earth. No substitute. Industry, solar, AI, and EV demand is exponential and inelastic. Geology, mines are depleting, grades are crashing, and byproducts are unreliable. Consumption, we've thrown away 55 billion ounces. It's gone forever. Inventory, the vaults are empty. Money, the fiat system is collapsing, and silver is the historical alternative. There has never been a setup like this in human history. In 1980, we had a monetary crisis, but we had plenty of silver. Today, we have a monetary crisis and a physical shortage. It's the perfect storm. So when you look at the price of $65 or $70, don't think it's high. Don't. Think of it as the pre-recognition price. The world hasn't figured it out yet. The banks are fighting it. The industry is hiding it. The media is ignoring it. But the math is inevitable. You're standing in front of a tsunami with a bucket. You can't stop it. You can only ride it. My advice to you is simple. Become your own central bank. Exchange your paper liability for physical asset. Hold it. Secure it. Wait. The repricing is happening. The most undervalued asset in history is returning to its rightful place.